Welcome back to the CLiK Trading Education Weekly Market Review, where we break down the key events shaping financial markets. This is your recap for the week ending June 5th, 2026. It was a tough week for global markets, no sugarcoating it. Risk-off sentiment dominated across the board, with equities and cryptocurrencies taking heavy hits. Volatility spiked sharply, commodities were a mixed bag, and the US dollar flexed its strength as traders sought safety. Let's dive into the big picture. Equities saw broad declines, with the Nasdaq leading the losses, down over 4.5% for the week. Tech stocks were hit particularly hard, and we'll touch on some of the big movers in a moment. Over in the commodities space, gold and silver tumbled down nearly 5% and over 8% respectively, while crude oil booked the trend, rising just over 2%. In currency markets, the US dollar gained nearly 0.75%, while the euro fell sharply. And then there's the VIX, Wall Street's so-called fear gauge, which surged by over 37%, a clear signal that uncertainty is on the rise. So why does this matter? Elevated volatility is telling us that traders are increasingly nervous. Tightening liquidity and ongoing macroeconomic uncertainty are weighing heavily on sentiment. We also saw a clear flight to safety, with the dollar gaining ground and riskier assets like crypto taking the brunt of the sell-off. Even within commodities, there's a story of divergence. Crude oil is being supported by supply concerns, while weaker demand dynamics are dragging down precious metals. In simple terms, traders hit the brakes this week and risk appetite was in short supply. Now let's talk about some of the standout moves that really grabbed attention. The VIX, as I mentioned, jumped over 37%, which is significant. It's a sign that traders are pricing in more uncertainty and hedging against potential downside risks. In crypto, Solana stood out for all the wrong reasons, dropping over 22% as part of a broader sell-off in the space. Meanwhile, crude oil managed to defy the broader risk-off tone, rising over 2% due to those supply-side factors. On the equity side, Microsoft fell over 10% amid concerns about tech earnings, and Palantir dropped more than 15% as speculative growth stocks were hit hardest in this environment. So what was driving the markets this week? Interestingly, there wasn't much in the way of major economic data or central bank announcements, but that lack of news can sometimes amplify the focus on sentiment, and that's exactly what we saw. Traders were hypersensitive to any shifts in the macro landscape and are still grappling with expectations of hawkish central bank policies. Inflation remains sticky, and that keeps the idea of tighter monetary policy very much alive. Beyond that, geopolitical uncertainty and fading relief over the debt ceiling deal added to the cautious tone. Looking ahead, the big question for traders is whether this risk-off momentum continues or if markets start to stabilise. Elevated volatility means risk management is critical right now. Keep an eye on defensive sectors and watch for any signs of rotation as markets adjust to this new dynamic. Also, pay close attention to correlations across asset classes. Those relationships are shifting and they can provide valuable clues for trading opportunities. And here's your trader takeaway. Weeks like this are a reminder of why discipline and a solid strategy matter. Elevated uncertainty can create opportunities, but it also demands a sharper focus on managing risk. As always, remember that this is for educational purposes only and not financial advice. Thanks for watching, and we'll see you next week.